If you're following the pros service and you're looking at the intraday comments I put out, you notice I've been spending a lot of time talking about cotton, sugar as well, but more so cotton, because here in the big picture, I thought that we had this is a daily chart, a thrust from a triangle. That's a terminal event, usually in this case, in this case, a fifth wave. It unfolded, I think, as an ending diagonal, as the name implies, a terminal movement. So I have a terminal event taking the form of a terminal or ending pattern. That kind of gets me thinking, grabs my attention, that a low should be coming in. We're thinking that cotton bottomed at 62.86. And from there, even on this daily chart, you can see it has rallied and pulled back. So far, holding above 62.86. So far, so good. Picking it up on the 30-minute chart from the low at 62.86, you can see I've counted a 1, 2. Notice that's a sharp wave 2, 3, triangle 4, so sideways wave 4, so alternation, and then a thrust to a new high in wave 5. So that becomes the start of something larger to the upside. Wave 1 as labeled, or if the bear market's still intact, it's wave A. But either way, the message is, this is what's important. Sometimes we can be wrong on the count, but have the right message. Whether I label that as 1 or A, the rally that is, the subsequent setback should prove corrective. It's either wave 2 or B. The structure of the retreat certainly looks corrective to me, and I didn't even put labels on it. Maybe a double zigzag, how about A, B, C, and then an X back to around 64 and a quarter, and then A, B, C. I'll go ahead just as an example. Since I didn't put it there before, let's add it. I'm going to say a combination here. And, computers don't always get things right. I don't always agree. How about we just simplify this here and do that? All right. And then notice at the 63.41 low, that's just 8 ticks beneath where this correction retraced 61.8% of the rally from 62.86. So based on the expectation for a correction, we see a setback that seems to have followed the corrective path and has retraced 61.8%. So I'll often write, this retreat, the structure and depth of the retreat are consistent with a correction. That's the case here. So that kind of had to perk your ears up a little bit. I'm interested in this. Let's see if this turns higher. Cotton did, and it looks like from 63.41, it rallied in 5 waves. I was talking about that just yesterday. Because when the market came back to 63.41, to risk back to 62.86 might have been too much risk. Now, this being a third wave, it's true. Cotton could have just turned around and accelerated the upside. But that's unusual in markets. It does happen, but it's not typical price action. Markets often offer second chances. And that's how I look at this lower degree rally from 63.41, followed by a setback, which just this morning I added 1, 2. Because if that's a 5-wave rally, then it's the resumption of the larger advance, wave 1 of 3. Therefore, I can now draw a solid line at 63.41. Based on this count, 63.41 should limit the downside. So this setback that followed that small degree rally should end above 63.41, or at least no lower. Having reached 63.64, as the setback was unfolding, based on the proximity to 63.41, the amount of risk associated with turning bullish somewhere along that setback and using 63.41 as the line of sand, there might have been an opportunity there. Again, based on proximity, but structure as well. And from 63.64, that sort of looks like 5 waves up to me. And this setback looks, to this point, 3 waves. So if you didn't take advantage of the setback into the low at 63.64, maybe the market's giving you a third opportunity. Maybe within wave 3 of 3, maybe this is 1, 62. And now it's time to think about being bullish against 63, 64. Okay. Multiple opportunities. This is how I go about turning a count into potential opportunity. And as you can see, I'm always tracking structure, of course. Does the structure meet my expectations based on the market's position within the idealized Elliott wave progression? But I'm also keeping in mind risk. Because if I'm going to be wrong more than I'm right, which sounds terrible, but I'm just trying to be realistic, it's at the end of the day all about risk control. Yes, I want to operate in the direction of the trend. And even if I have the wrong count, if I'm correct in terms of the trend, then it's kind of a rising tide lifts all boats kind of thing. That trend can bail me out even when I have the wrong count. And sometimes, as you know, based on the wave principle, we're working more than one possible count, sometimes two, sometimes three. I've had times when it's more. But if you're working two and they're both bullish, or three and they're both bullish, you don't necessarily have to have the right count to find yourself benefiting from the trend. That's why I always start with the big picture, the trend, work my way down. All right, so here too, I'm looking at potential opportunity in cotton. Now, we here at Elliott Wave International don't provide trading advice because I don't know you and I don't know your tolerance for risk. I don't know your investment and trading goals. So it'd be impossible for me to guide you like that. All we can do is identify where we think each market is located within its idealized path and suggest this may be an opportunity for you to consider. And that's about as far as we can go. From there, it's up to you.